Hello everyone, myself Vaibhav. In today's session, we are seeing the continuation of the downward trajectory in Euro USD, where we are witnessing the fresh break below 1.215, and it looks like that this downturn is going to push the Euro USD even below the 1.21 level in the short term, and we will try to figure out if there are optimum entry and exit points in today's session for us to exploit. If we look at the data rocket, it is telling us the tale of two economies of the world, and here we have the contrasting story. On the one side of the spectrum is China, where the trade surplus has hit the all-time high of US dollar 78 billion for the month of December, and that is happening because of the difference in the economic output, the industrial production in the major economies. In China, the upturn has been fairly sharp, and more or less it has been able to control the COVID pandemic, and as a result of that, it is reaping the benefit in the economic term. Whereas other major economies of the world, particularly the Western world, are still suffering from the prolonged lockdown, and as a result of that, the economic output is lower, and that is being reflected in the trade surplus which China is enjoying while trading with other major partners. And just a while back, we got the US initial jobless claims number, and this is the highest reading in last 5 months. It is just shed below 1 million, and this is kind of worrisome, but markets are not really reacting much negatively, as this underscores the need for continued easy monetary policy, and the Fed is not likely to change its stance. And as long as the Fed is accommodative, I feel the equity market's exuberance is here to stay, and it will be beneficial for us to adapt to this reality and accordingly trade. And in today's session, we are indeed looking for fresh long opportunities in the equity segment, and our interest is going to be the NASDAQ. On the currency front, we will see what's happening in the Euro USD, and as I have said in my opening remarks, the trajectory has turned bearish for the Euro USD, and we will try to exploit the changing circumstances to our advantage. So let's get started for the technical outlook of Euro USD first. This is the daily time frame chart, and here we are witnessing the fresh breakout below this key support zone. This was the price zone where we had earlier seen the Euro USD consolidating, and then the fresh break above it, and it pushed the Euro USD towards 1.235. But now the Euro USD has entered in the correction territory, and in the near term, it looks like that this downturn might push the Euro USD further towards this 38.2% Fibonacci retracement, which is there around 1.206, and that should be our near term target if we are looking for the fresh trading opportunities in the Euro USD. Relying on the lower time frame chart, this regression curve as well as the new breakout below this central pivot point, both these technical parameters are supportive of the opinion for bearishness in the Euro USD. And I think in today's session, we did have a chance earlier in the day, but if any of you have missed out on that, I think if fortunately enough we get any second opportunity to go for the short trades anywhere close to 1.215, then we should wrap it up. But it will be, of course, difficult to see if Euro USD will go back to this consolidation phase levels or not. Right now it is trading close to 1.212, so we are almost going to need 30 pips up move from the current levels, and that is a tough ask given the fact that this fresh breakout is there, and I am expecting this downfall to continue as there is no immediate support in sight, not unless we consider the Fibonacci retracement level which we saw in the daily time frame chart. From this pivot point series, we have the next support coming up below this 1.20 level, so there is no immediate support in sight. And keeping that in mind, it will be interesting to see if we can capitalize on this situation. As I said, in today's session, the entry point anywhere closer to these prior consolidation phase lows and to be capped at on the higher side around 1.215 should be good enough while keeping the stop loss just anywhere above these 50 SMA. So in technical terms, our stop loss will be higher than this immediate swing high as well as the near term resistance zone of this confluence of 50 and 100 SMA. So taken together, we will have to take the risk of around 30 to 40 pips on the higher side, as we will have to keep the stop loss anywhere close to 1.218 or 1.219 in that price range, and on the lower side we will be targeting the price zone around 1.206. So we are going to get the risk reward ratio of 1 is to 2 or even better than that. Now moving on to the equity segment, we will see the Nasdaq's technical outlook. This is the daily time frame chart, and here the Nasdaq has been consolidating closer to these all-time highs, which were touched just in last week, and in the near term, this bullish trajectory is continuing, and I am expecting a fresh breakout above the 13,000 levels, and then new swing high or new all-time high being formed in next couple of sessions. It might happen today or it might happen after a couple of days, but the thing is, as long as the formation remains of higher highs and higher lows, we can continue to bet on the long side trades in the Nasdaq, and that will be the better or even best thing to do in the current scenario where both these technical formations, the regression curve as well as the pivot point series, both these formations are bullish, and here we had observed this resistance exerting pressure on the Nasdaq and pushing it lower. But after these couple of sessions of consolidation, the momentum is looking solid for the Nasdaq, and in today's session, it has been able to hold above the 12,900 price area. And if it is successful, then by the time the US markets open, I am expecting the fresh lease of life for the long traders, and eventually the all-time high might be broken and we might see the Nasdaq leaping above this resistance zone and moving towards the second resistance, which is there around 13,400. So keeping that in mind, if you want to optimize the risk reward ratio, I think this formation of confluence zone of 50 and 100 SMA should be good enough. So if we are taking the trade anywhere above the 12,900, I think the stop loss can be kept just below this immediate swing low. So for a risk of around 100 points, we can target almost 200 points on the higher side. If our entry is going to be anywhere closer to this price marker, the confluence zone of 50 and 100 SMA, while keeping the stop loss just little above the 12,800 area. On the higher side, we will have to target the price zone of around 13,200 or even beyond that to make sure that for the risk we are taking, we are also entitled to seek the rewards in good proportion. So we will have to make sure that the risk reward ratio is also optimum, and keeping that in mind, we will have to look for the target of at least 250 or more points. So that's it from my side for today's session. If you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Do subscribe to the Ducoscopy webinar channel to stay updated on the market developments. Thank you all for joining in. Goodbye.